The crypto market is on fire right now, and not in the way most investors hope it buckus. While the long-awaited XRP ETF has finally launched, signaling what many analysts believe could be the beginning of a major institutional shift toward Ripple's ecosystem, the broader market is simultaneously drowning in a wave of extreme fear, liquidation spikes, panic selling, and sudden volatility that has left traders questioning whether we're on the edge of a new bull cycle or staring right into the face of a brutal market crash. And in this detailed analysis, we're breaking down exactly what's happening, why it's happening, and what the XRP ETF means for the future of crypto. Over the last few weeks, the sentiment in the market has flipped almost violently from greed to fear, with Bitcoin losing key support levels, altcoins bleeding heavily, and leveraged traders getting wiped out in one of the fastest liquidation cycles of the year. But despite all this chaos, something interesting is happening behind the scenes. Hesitations are accumulating, whales are repositioning, and regulatory clarity around crypto, especially regarding XRP, is finally beginning to materialize in ways that could completely reshape the next phase of the cycle. The launch of the XRP ETF, which many thought was impossible due to Ripple's long-standing legal battle with the SEC, has taken the market by surprise, not because people weren't expecting institutional interest, but because the timing is absolutely wild. Launching an ETF during a phase of extreme fear is like releasing a rocket during a storm. It might explode, or it might cut through the chaos and soar beyond expectations. Institutions historically buy when retail panic peaks, and that is exactly what we're seeing now. While traders on social media scream about crashes and capitulation, institutional flows into XRP-related products are climbing steadily, sending a signal that the big players are preparing for something much larger. Ripple, despite all the drama surrounding price stagnation, has been building aggressively behind the scenes, expanding on-demand liquidity corridors, partnering with global banks, integrating with cross-border payment solution providers, and positioning XRP as a real-world utility asset rather than just another speculative token. The XRP ETF doesn't just give investors a new financial instrument, it gives legitimacy, access, and visibility at a scale never seen before, especially for traditional investors who were previously hesitant to enter the crypto space directly. But why is the market crashing if something so bullish is happening? The answer lies in liquidity pressure, macroeconomic uncertainty, and cascading liquidations. Bitcoin dominance has spiked as investors flee altcoins for safety. Global markets are responding to inflation fears, interest rate uncertainty, and geopolitical risk, and leveraged traders who were betting on short-term pumps have been crushed by sudden swings. But here's where it gets interesting. Fishing exact pattern has repeated itself before every major bull run: extreme fear, sudden crashes, weak hands exiting, and strong hands accumulating. In 2020, in 2018, in 2015, inventor cycle showed the same behavioral pattern, and XRP has historically reacted with explosive upside after long consolidation zones combined with institutional catalysts. The XRP ETF could be the spark that finally breaks the stagnation we've seen for years, but only if market conditions stabilize. Right now, whales are doing something very unusual, accumulating XRP while the price dips, buying millions worth of tokens from panic sellers, a clear indication that they see long-term value in the asset. At the same time, on-chain data shows an increase in wallet activity, dormant whales being reactivated, and cross-exchange transfers that suggest positioning rather than exit. Meanwhile, mainstream crypto influencers and analysts are divided, with some calling the ETF launch a sell the news event and others arguing that we're witnessing the birth of a mega catalyst that will ignite a new institutional wave. The truth probably lies somewhere in the middle. Short-term volatility is almost guaranteed, especially during a period of extreme fear, but long-term implications are overwhelmingly bullish because that spring mass adoption, regulatory clarity, and deep liquidity, things XRP has desperately lacked during the SEC battle. In the broader market, panic is rising because altcoins are falling faster than expected, some losing up to 24% in a matter of days. But with fear also comes opportunity. Historically, moments like these are when millionaires are quietly positioning themselves while the crowd runs away. Bitcoin's price correction has dragged everything down, but when Bitcoin bottoms, altcoins usually follow with strong rebounds. XRP, with a newly launched ETF, may have the strongest rebound potential of them all. The biggest question investors are asking is whether this downturn is temporary or the beginning of a long-term downtrend. Based on current data, this is most likely a panic-driven flush, not a structural collapse. Large investors are still buying, long-term holders aren't selling, fundamentals remain strong, and liquidity indicators suggest the market is oversold. For XRP specifically, the ETF could drastically change investor psychology, just like Bitcoin ETFs transform BTC from a speculative digital asset into a mainstream financial instrument. The XRP ETF could do the same for Ripple's ecosystem, pushing it into the spotlight of institutional portfolios. Additionally, Ripple is preparing for major expansions in 2025 with new ODL corridors in Asia, Europe, and the Middle East, as well as potential collaborations with central banks exploring BEXTIS positions XRP not only as a speculative asset but as a fundamental part of the future financial infrastructure. The extreme fear we're seeing now may actually be the perfect environment for institutions to accumulate cheap positions before the next big cycle begins, and if history repeats, fear precedes recovery, and recovery precedes massive rallies. We also have to remember that crypto markets move in cycles, and fear cycles are often followed by massive price expansions. The ETF doesn't guarantee immediate price pumps, but it does guarantee long-term accessibility and demand pressure, especially from traditional investors who prefer regulated products. So while the market appears to be melting down, and while traders are panicking across social media, what's happening behind the scenes is a quiet restructuring, hands out, strong hands in, and a new financial product opening the doors for billions of dollars in potential institutional capital. The crash might not be pleasant, but it is shaping the next big move, and XRP, armed with a newly launched ETF, might be positioned better than almost any altcoin heading into 2025. Extreme fear creates chaos, but chaos creates opportunity, and right now, the XRP ETF launch could be the most unexpected opportunity of the year, emerging at the exact moment when the market needs a catalyst the most and when the majority of investors least expect it.